Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now, today's episode, we have an interesting new credit card from Aven to take a look at. It's combining a home equity line of credit or HELOC with a credit card. So in typical fashion, we'll look at Aven as a company. We'll break down HELOCs. We'll take a look at this card, what it's trying to do, how it works, the pros and the cons. Come on the other end of this, figure out if this is a card worth adding to your wallet or not. So of course, if that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. Now again, we'll start with the classic did you know slide. Then we're going to spend a little bit of time on how a regular home equity line of credit or HELOC works, because that's really what this card is based off of, so we have to understand that. Then we'll take a look at the card itself. So getting into it here, Aven as a company. Now this is from Pitch Deck, so they're still fairly new, but it's always good to know what their mission is. So Aven Financial Services, they're a provider of financial advisory services intended to reduce the cost of capital in the world. The company's services include providing an asset-backed credit card that uses technology and operations and offers cash back, enabling users to reduce the high interest rates that they pay. So what does all of that mean? It's a lot of words. It sounds nice. What does that mean? So a regular credit card, as you may be aware of, is a form of unsecured debt because there is no asset or no collateral backing the credit card, right? So your car loan, your home loan, those are loans against an asset. If you don't pay, they can come take your car. They can take your house. Against popular opinion, they really don't want to take your stuff because it's a hassle, but it does make it somewhat less risky because they're still a way for the bank or the lender to get some of their money back by repossessing it, then flipping it for a few bucks. Now for the regular credit card, it's unsecured because if you go and you buy a sandwich, no one's coming to take your sandwich away, right? It doesn't really work that way. It doesn't have any value, and they don't know what you're going to buy with the credit card, so it's unsecured. And because it's unsecured, it can be more risky, and risk basically means more expensive. How you price risk, interest rates are basically a form of pricing risk. That's really what you're doing. You have the base rate, par rate, if you will, and then they price in risk based on the type of product it is, your credit stats, and all that good stuff. So what Aven is basically saying is like, hey, we could offer a credit card and it's like a home equity line, so it's going to be almost secured or backed up by the equity you have in your house. So what does that mean? Well, again, home equity line of credit, or HELOC for short. Let's talk about that, then we'll get into the card. So I'll put some stats on the screen for you, but again, it breaks down home equity line of credit. It's basically secured against the equity in your home, which is the difference between the home value and the outstanding balance that you owe on that house or that loan. So basically, it gives you the option to borrow a percentage of your equity. The option meaning you don't have to, but you have the option to pull from that revolving line of credit. Revolving line means as you pay it back, the line goes back up, just like a credit card. You pay your credit card balance off, you have access to more available credit. The rates do vary because, again, it's not a fixed lending product, so whenever the rates do change as you pull money out. The reason is because there's a draw period. A draw period is about 10 years, give or take, depending on what you sign up for. And so you could apply for a HELOC, then you have 10 years where you can use that money at your discretion, and usually you only make payments on the interest during that time. If you so choose, you can pay more, obviously, but usually it's only interest payments. And there is after that 10 years, there is a repayment period. They could be somewhere around 20-year repayment duration where you start to repay what you've drawn. You can also get an extension for that as well if you want. Now, there's fancier ways to actually open home equity lines when you purchase a home, right? But usually it's done after the fact, so you've paid into the house, right? So you have this equity, which equity is nice, but equity is essentially like dead money because you can't do anything with it. It's nice to say you own a good portion of your house, but you can't do anything with it. So a home equity line basically gives you access to that money, and you see a lot of people use this for home renovations is the big one. You want a new kitchen, new deck, swimming pool, something like that. People have done, if you own multiple properties, you can do a few different HELOCs and go buy a third or fourth property if you want. So these are some of the use cases, right? So the card is basically, instead of giving you a credit limit, it's basically working off your equity in your home. So that's how this is going to work. We'll talk about the sign-up process in a second. So now that we know all that, we're a little late, but let's get to the card itself and see what they're offering. So here you have it. Aven, black card, it's nice. I don't know if it's metal, but I like anything that's black. No annual fee, and your multiplier is going to be 1.5x on all purchases, and that's pretty much what you get. Now, of course, you're supposed to have lower interest rates because it's a secured, basically it's secured against your collateral or your equity and not an unsecured card. So what do you need to know? Well, this is straight from their site. So again, we've talked about the rewards. But what can you do with this money? So obviously you can spend it, use it like a regular credit card. But other popular use cases for HELOCs, again, you can cash out to your bank. However, direct deposit cash from Aven Card to your bank, but there is a one-time fee of 2.5%, which is pricey. You can do debt consolidation and balance transfers. Again, 2.5% fee. And of course, they do have flexible repayment options. They're also advertising there are no fees. So sometimes you'll see fees. There's always going to be like an origination fee. There could be an appraisal fee to see what your house is worth, closing fees, things like that. So they're saying, hey, we don't have any of that stuff. Now, as far as signing up goes, again, you can go on, you can check your offer, put in your home's information. Again, they're probably going to run some automated valuation tool on your house, AVM for short. If you like what you get, then you can go ahead, you can schedule a digital closing, because again, housing products usually come with a notary signing. Again, if you bought a house, you're familiar with this, you go to the closing table. Sometimes the sellers and buyers are all there, sometimes they're not. But this is all digital, which is not uncommon. You can do remote notary closings. I did one for a refinance purchase. It's usually a little bit trickier, but that's besides the point. So that's kind of a sign-up process. And then basically you have a credit card tied to your equity. And you don't have to use it, but you can use it. So what do we think about all this? Well, I think a few things. On one hand, the thing I respect most about finance is that they're not afraid to get in the lab and make some new products. The fact that this exists is fascinating to me. It's not that different from how a regular HELOC works, because what'll happen is you'll get a HELOC and then your bank will give you a checkbook that you can write. Some do give credit cards. It's not unheard of, right, that just give you a card that you can use, easy ways to use the money, or you can just kind of transfer it out. What they're doing is kind of sliding in and saying, hey, look, banks have failed. A lot of big banks have failed at making things very consumer accessible and seem very easy. So they're sliding in and saying, well, we can make this really easy. You can do it all from your phone. It's not any different than what you normally do to Bank of America or Wells Fargo, but we're just going to put the UI behind it and make it easier. And that part's really cool, because that does push banks further to have to make these things easier. Now, the problem here is that I would say if you're going to do a HELOC, it ranges, but your closing costs maybe $500, $400, $500, depending, honestly. So they're not charging you any of those fees up front, which is nice. But the problem you get into is that, to transfer cash out at 2.5% or debt consolidation at 2.5% is, whereas on the HELOC, yes, you may pay some upfront costs, but there is no charge to take your money because it's your money. So it's just flipped. Banks are making some money on the front end, not that much. They really just want to pay for the cost. So they don't incur any costs. They're not necessarily making a ton of money on the origination fees. And then, making their money on the back end on the interest stuff, right? They're, flipping it. Hey, we'll take the upfront cost because we figured out how to probably mostly automate it. And then, we'll make our money on these interest stuff. So that's the tough part. It really depends on what you're going to do with the money, because you are getting charged to pull out your own money. 2.5%, kind of a lot, when you could get a regular HELOC from a bank and just pull the money out until your heart's content. The other thing is, I don't know that I would condone anyone walking around and using their home equity at McDonald's or Starbucks or the mall. Home equity is really, people save it for home renovations. And it's my own personal opinion. I don't necessarily agree with it on home renovations a ton. It really depends on what you're trying to do. If you want to take the equity out and go buy another house or something, by all means, debt consolidation, I think, is a good option. But to get a new kitchen, I don't know, it's my personal feeling. I probably wouldn't do it, but plenty of people do it, and there's nothing wrong with it. So I wouldn't necessarily sign up for this and be running around with it using your equity like a credit card. You'd be much better suited, probably more responsible, getting a double cash, SoFi card, active cash, what have you, 2%, and just pay it back, and then save an equity line for if you need massive debt consolidation, a massive home upgrade, renovation, or what you're doing and you want to make some other real estate play. This almost makes it a little too accessible in my opinion, for a product like this. So, to sum it up, I'd say I'm fascinated that someone came along and did this. I respect what they're doing. I think it is interesting that it is a product. Would I recommend it for a lot of these use cases like a credit card? No, I would save that for a credit card, pay it back at the end of the month. And even if you need, to cover some of those use cases, I would really just look into a regular HELOC where you pay the upfront origination fees, whatever it is. Plus, if you're watching this, in 2023, equity products are being pushed because they know a lot of people are not refinancing right now. So banks are pushing equity products because people were going to sit tight usually and want to upgrade. So you might even be able to find some deals out there. Again, if you're watching this in the future, well, hopefully rates have come back to normal. But for now, something to keep in mind. So anyways, there you have it. That is our summary of Aven Credit Card. Interesting to say the least. So of course, if you like this one, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel, as we're posting content just like this every single week, right back here every Sunday with all the news you can use in the week that was in credit and finance. Of course, every single day over on profitablecontent.com. Question for you guys. Let me know your thoughts on home equity lines. What have you used them for? What do you think about this product? Am I the only one who thinks it's just kind of fascinating, but maybe not the right tool for the job per se? Love to get your thoughts on that. But anyways, guys, that's going to do it for this one. As always, thank you so much for watching, and talk to you very soon in the next one.